Good morning, everybody. Today we are going to be discussing the next chapter, that is banking. Now, we are going to divide this chapter into two parts. In the first part, we are going to be understanding what are commercial banks and how is money created or money created, that is credit creation, that is money multiplication takes place by all commercial banks in the economy. The second part we are going to discuss is what is a central bank, what are the functions that a central bank has to observe, and most important, how does central bank control the money supply and credit availability in the economy. So firstly, let us understand what is a commercial bank. A commercial bank is basically a bank which does two vital functions. One, it accepts deposits. Second, it grants loan. But obviously, it's working on behalf of the government, and for the benefit of the public, it does this with an aim to earn profits. The difference between a commercial bank and any other financial institution is a financial institution performs any one of the functions, either accepts deposits, maybe like a life insurance, or it only grants loans, maybe like Mudut Finance. Mudut Finance only gives you loans, it does not accept your deposits, whereas life insurance accepts your deposits in the form of a premium. So you've got the difference between a commercial bank and basically a financial institution. We are going to now understand how does money creation or credit creation take place in an economy. Basically, what is credit creation? Credit creation is when the credit availability in the economy increases. How does money actually multiply? And let me tell you one thing, the commercial bank plays a very important role in doing this. It is not the RBI which does this, because the commercial bank deals with the public directly and RBI governs all the commercial banks. So it is with the help of the commercial banks that we are able to create credit or multiply the money in an economy. Now, for understanding this entire process, we need to have two assumptions, because we're studying economics at a macro level. Without an assumption, it's practically not possible to understand the concept. The first assumption is that the entire banking system is going to be considered as one bank. We have hundreds of thousands of banks in India, right? I mean the thousands of branches. We have many banks, that is the public sector banks, the private sector banks. हमने इन सब बैंक्स को एक मानना है, पूरा एक कमर्शियल बैंक मानना है, चाहे वो पंजाब नेशनल बैंक है, चाहे पंजाब सिंध बैंक है, चाहे आईसीआईसीआई, कोई भी है, वो एक बैंक है. Second, all receipts and payments in the bank, in the economy are routed through the bank. मतलब कोई भी पैसा अगर हम दे रहे हैं या ले रहे हैं, it has to come only through the bank, which indirectly means that there is no transaction other than the banking system. So if bank is giving me money, then the bank has to give me money into my account. If I am depositing money in giving money to somebody, I have to deposit it into his account. So the entire banking system is considered as one bank. And second is all receipts and payments are floated or routed through the banking system in the economy. These are the two assumptions on the basis of which we could understand this. All this information is there on page number 6.4 of Sandeep Garg. The third thing which we need to understand is what is legal reserve ratio. Legal reserve ratio is basically that much of a compulsory funds or legal compulsory fraction of funds which every commercial bank has to keep either with the RBI or either with themselves. We are going to be studying this a little later on in detail under controller of money supply as RBI. So legal reserve ratio plays a very important role in understanding the money creation. On the next page, we have a very good example. I'm going to focus on this particular table. This particular table is very important. After I have explained this entire concept to you, I'm going to upload one pic. In that pic, this entire answer is given to you in one page, right? If you look at this particular example, we are assuming here that the initial deposit by the RBI is 1,000, by the commercial bank is 1,000. The legal reserve ratio is 20%. मतलब जितना भी पैसा बैंक के पास है उसमें से 20% बैंक ने अपने पास एज ए रिजर्व रखना है. बाकी का जो उसके पास 80% बच जाएगा वो आगे लोन के रूप में दे सकता है. So let's understand the process. The initial deposit in the bank is 1000 rupees. Which bank we're talking about? Commercial bank. Commercial bank ने इसका 20% क्या किया? अपने पास रख लिया, which is 200. Now why did it keep 200 or 20%? Because banks को एक history या अपने experience से idea होता है कि इतने पैसे over a period of time withdraw करने के लिए लोग ले सकते हैं. So 200 it has deposited with himself as a reserve. बाकी का 800 उसके पास एक्स्ट्रा बच गया, राइट? अब वो 800 क्या करेगा? इट विल इशू इट एज अ लोन टू सम अदर पर्सन. व्हेन इट इज इशूड टू एज अ लोन इन एन इकोनॉमी, दैट लोन, एज आई टोल्ड यू, हैज टू बी ओनली rooted through the banks. It is again deposited into maybe some other bank, but into the bank. Now that bank keeps 20% of it, which is 160, and 640 is the excess amount that bank has. Now what does that bank do? Again, 640 is given as loan further in the economy, and that 640 is again routed through the banking system and deposited in the bank. So initially we had a deposit of 1000, now we have a deposit of 800, and now we have a deposit of 640. Don't forget that the bank is earning a rate of interest on all this, and this is the amount which when given in the economy, the bank is liable to take it back. Again, they keep 20% of it, and 512, which is 80% of it, is granted. This process will continue until the total legal reserve ratio is equal to the initial deposit by the banking system. Now, if you want to really understand how much of money has been created by the initial deposit of 1000, we use a formula. The money multiplier formula is 1 by LRR. So what was our LRR? 20%. 1 by 20% is nothing but 5 times. It is 5 times. 5 times. So 1 by 0.2, which is 5 times, right? Now how much has the money been multiplied? 5 times than the initial deposit. So अगर हम initial deposit के साथ multiply करें, how much of money has been created in the economy? 5 times. That is 5,000. Out of which 20% is lying with the banking system and 80% is given away as credit. See, this is how commercial banks earn a profit, earn a rate of interest. पहले उनके पास 1000 का डिपॉजिट है, राइट? फिर उनके पास 800 पर इंटरेस्ट आ गया, फिर 640 पर इंटरेस्ट आ गया, एंड दिस गोज ऑन टिल 5000 पर इंटरेस्ट आएगा. So this entire process is of 6 marks. You have it on the next page. You have an example here. Money multiplier is 5%. Total is. Let me tell you one thing interesting. You can do the same thing with taking LRR as 10%. जितना ज़्यादा LRR कम होगा, that means banks are keeping less reserve with them. So banks are playing on a higher risk. When they're playing on a higher risk, obviously the credit created in the economy will increase. If you take LRR, here they've taken it as 12.5%, 8 times. If you take LRR as 10%, 10 times the money will multiply, right? So it becomes 10,000. So lesser the LRR, higher is the availability of credit.